Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show. We look at what happened in the market during the day and how we can plan for a better trade for the next day. And this is analysis for May 26, monthly expiry tomorrow, Thursday, 2022. So we had some kind of consolidation that is happening when the markets went in a contradicting way. The Banknifty was showing strength, but Nifty could not sustain the move, and then some kind of consolidation and losing movement is what is happening. Let's get into the details and see what pre-market analysis for tomorrow will be based on all these parameters that you see. Right, we'll be checking the charts, each of these parameters. We'll do data analysis also. We'll wrap up and conclude on a view, and then we'll have some actionables as well. So let's get into and see. So bearish candle back to a support zone from where breakout happened. So that's exactly what is happening, right? Falling down, moving up, coming down, again moving up and coming down. So it's zigzag, W, M, all kinds of V-shaped moves is what is happening. So it's basically trying to hold the bottom level and consolidate there before it gains the strength for the move ahead, right? Banknifty also, this is similar, but it shows more strength, because you can see that the last 3 days, all the 3 days, it is just it is getting stuck at one single point of resistance below the 20, 35, 34, 7 or 800 levels. Before the 35,000 levels, it's facing the resistance in that zone and then gets hits and then forms the 3 days consecutively inverted hammers is what you see there, right? So as we know, there is a previous swing low down here and we are very close to that, right? So 15,735 would be the first resistance, and then down to the previous major swing low of 15,650 after that, right? So same here, but it's a little further down from the previous swing low. We have 33,000 also just reversed out. So that's how it is. Intraday price action, if you can see, both Nifty and Banknifty gapped up, right? This is 0.5% and this is 1% Banknifty. And after that, it was mainly trending move. Although there was option players might have found it tough because there was some indication of an up move that was happening, and then it went to selling pressure. So it was trended move throughout. If you see, going up, down, down. So it was trended move. But the thing is, Banknifty went flat, gaining, closing in green basically, right? Just few points, but Nifty could not do that, right? So it's intraday price action, and the Bollinger Bands is clearly showing bearishness. So downside expansion is happening on both indices on the daily time frames. Now to be specific, flat day. It's not a flat for Nifty. Nifty is bearish, nearly 100 points lost. Bearish day. We are in a downsliding trending channel, you know that. Price action is that, and Banknifty is flat, with a 50 points gain from there, right? And also it is more consolidating and more strength is there than Banknifty. That's why the price action. Nifty is it is more bearish, as compared to Banknifty, right? So intraday, we have seen that. Bollinger Bands also we have seen. Let's move and see the levels, right? All we can do is place your bets on certain levels that where there is previous support and resistance, right? And do the risk management portions properly. Rest is what market gives we have to take, right? You can't predict anything. You can only talk about probabilities where it can stop here or it can break out here, things like that. That's all. So support resistance are very key. So the first support now down would be 59.8, 59.50 with next 60 retracement levels. And then if that slips, then we go to 15,500, 15,650. And then further down from here, 15,350, 450 levels, and then to 15,000 downside. Similarly, upside resistances would be foreseen at 16,100, 16,200, that zone, where it was trying to hold on today and did not work out. Above that, you have 16,453, so nice 50 retracement level. Then you have the gap resistance with 16,550, 16,650 long, and above that is 16,700, 750, and 16,800, 8,900, which is the magic 30 retracement level. We have another gap resistance up there now above 17,400 levels, right? So a lot of resistance on the upside. So it's some kind of zigzagging that's happening at the bottom, basically. Once again, I'm trying to read the Banknifty. So the first supports would be 34,000 Fibonacci 60 retracement level. Below that you have 32,800 levels, and then Below that you have 32,150 and then 31,000. Upside resistance would be 34,350, 750. That's the first zone. Then resistance at 35,000 to 35,300. So if you match 50 retracement, above that you have 35,600, 35,900. Then you have another resistance and it goes on like that. So, but I don't think that kind of move is going to happen. So for tomorrow, probably may have to watch this 35,000 levels on the upside and whether 34,000. So it's that are the major support and resistance that you can read out from for the expiry. It's a monthly expiry tomorrow. So making note of those support and resistance level. Also look at the change in open interest and the open interest data intraday, and today is what OI data anyway we'll be looking. So correlate these two chart levels and the OI levels and you can come to a conclusion. Look at this momentum. It's sideways. It maintains sideways. Does not slip to the bearish zones after it had climbed. So whenever there is a climb from one zone to another, we call it a momentum range shift. Right now it is range shifted into the bullish zones, into the sideways zones from the bearish. So that's kind of positive. There is some chance, probability, if the range shift works out, for the momentum to bounce up from here. That means the price can move up, right? So right now sideways momentum, but that range shift is not at there in the bank nifty. It's still in the sideways, but range shift not there. For range shift, it has to come and hit this 40 RSI. So that is momentum, sideways momentum, and that's the same in medium term also. This is a daily charts that you see. So momentum sideways trend. One thing has happened is bank nifty just crossed over to the bullish zones, right? DMA positive is what is dominating now. And although the trend has taken a bend long back and it was falling, and the crossover finally happened first, Bank Nifty does not happen, so it remains in the bearish zones, DMI negative. Medium term, both are bearish. So trend slightly shifted to the bullish zones on the Bank Nifty. Don't know, we're not sure whether it can once again close back tomorrow if things then work out. But Bank Nifty trend short term is bullish now. Short term, very short term. Right. So Nifty is there to catch up in the trend. So some change in the trend has happened in Bank Nifty. That's all we can. Momentum remains to be sideways consolidating. Right? What it is did a 10% spike yesterday and so it cooled off around 1.5% today and still about 25.28. Implied volatility is 22.72. Implied volatility for the Nifty is what that is. Implied volatility percentile is 89.2. So that's at the top for the 52 weeks of percentile if we calculate. So VIX is a greater than 25 idea. VIX is a fear and greed index and you have to be cautious until it goes up below 20. Right. So which is there is uncertainty there in the market. You never know what happens, right? Open interest analysis, you can see that there is some call write-up that has happened today. The change in open interest, some OTM unwinding. So overall call write-up is what is dominating the Nifty. Bank Nifty also a lot of call write-up is seen there. So overall you can see the levels is 15,500 and 16,500. So that's a 1,000 point range where the option put writers and call writers are seeing the support and resistance. So 16,000 and 16,200 is the next second level of support and resistance. 0.64 is not bullish at all. It's towards, neither is it bearish also. So it's flat sideways, unpredictable way is what the put call ratio is there in Nifty. 34,000, 35,000 is the 1,000 point range that for the put writers and call writers at their maximum. 33,000 and 36,000 is the second level of highest put and call writing levels. 0.78 is closer to bullishness, you can see that. And long build-up is in futures open interest is what is seen in the Bank Nifty, but short build-up is exactly the opposite. Short build-up is what you see in Nifty. So Bank Nifty is showing strength, Nifty is showing weakness, and it's a 1,000 point for Bank Nifty and Nifty range. Bank Nifty 1,000 point is nothing. The market is thinking that it may be going around this zones of So this is the same thing that is matching with the charts also. We have seen that this 35,000 there is a gap resistance. If that is clear, that's bullish. 34,000 we have is Fibonacci 61, so that's exactly matching with 15,500 and 16,500. That is also matching because 16,500 you again have some kind of a gap resistance above that. It's bullish, means if it sits so. And 15,500 you have another previous swing low. If that hits there, 650 is cleared, means it's swing low. So any of those things could happen tomorrow. We cannot predict. Anything between the 1,000 range is possible is what option riders are thinking. So it's kind of Bank Nifty clearly shows bullishness, and narrow range is what it shows, and futures OI and PCR all are showing bullishness. Bank Nifty, but Nifty unpredictable. That's OI before the expiry of monthly tomorrow. So some green is there. You can see the received twins have done good today, and ICICI Bank and Kodak Bank, two banks did good. Banks overall has major banks, heavyweight banks have done good. Sector wise, if you see, nothing performed, right? Only power sector or something has performed, right? So IT stocks did not do well, TCS did really bad. So that is something that is worrying. Index heavyweights, if you see, this is what happened. HDFC Twins did well, some greenery is seen that, but remember it is in the sideways zones and it is good. Major resistance on the upside, both HDFC Bank and HDFC. Reliance was doing good, it was good bounce up, but today was a red day. It was a sideways momentum, just unable to climb back the bullish zones yet. So probably it may consolidate some more before it takes strength to move further up. Infi was red day, going further and down, breaking all the support zones, and look at the TCS just holding this retracement of 23% at this consolidation zigzag zone for a very long time, and it has slipped down, try to climb back now. Another support is also breached and it is fallen big today. Right. So that's momentum is clearly in the bearish zones on both the IT heavyweight stocks at Infi and TCS. As the bank is performing, it is remember it has got a major resistance upside, momentum is rising, but is in the sideways, not in the bullish zones. Right. Trend is crossed over the bullish zones, going up. So it was performing today. When Kodak was performing consistently for last many very weeks, and finally it has climbed to the bullish zones. But remember, it is could not close above this resistance zone, so you have to keep a watch. If any price move above the high of today's candle high, would be a clear good up move that can be seen in the banks. So banks, which Kotak and Kotak is performing, and ICICI also is performing. HDFC also. So banks are showing good momentum, but only Kotak is there in the bullish zones yet. IT is troublesome. Reliance is waiting and then consolidating. Sectoral performance, if you see, it was down day, right? IT fell 3.4% further down, so it's more than 35% of downfall that's happening, and is going in par with the Nasdaq, right? So bearish, there is a bullish divergence, but it is not working out, and it's falling like anything, right? So bearish momentum all over there. Metal down 2%, auto down 2%, pharma down 2%, FMCG down 2%. FMCG was flat today. No, except that 3% reality down. So all of the sectors except FMCG is down, and except FMCG and auto, all are bearish momentum on the short term, and FMCG and auto are maintaining the sideways momentum in the short term. Right. So top-down approach of performing stocks and going long on that will not work. As of now, you just have to wait for the momentum to catch up. Selling yesterday also nearly 2,400 crores of selling has happened from the Fyers, and TAS buy, but that's not enough. That's what is happening. So that's what is happening since almost a year now. Last 2021 April, since then it has been selling and selling, something but selling from the Fyers. The same thing is happening. Let's just quickly see if the data has come in for 25th today. Yes, it has come today also, 1,800 to 2,000 crores of selling, but some additional buyers happened from the day, which kept the market from falling down. That must be the banks, Kodak banks, that might have been bought. Let's get back. So institutional selling from the FIS especially is a worry, right? Continues to be a worry. Looking at the currency, using the dollar is kind of USD first, so that's consolidating. It's an all-time high. Rupee has weakened to the core. It is still about 77.5. So, right? Today it moved off, and it is picking up more momentum. And also you can see the US dollar index also is rising up with the green candle, and it's in the sideways zone, but it had retraced substantially down after breaking out of multi-year high. Dollar index has cooled off, and now it is rising again. First it's showing a green candle today, but it is at least cooled off a little bit. So that the rupee is weakened to the core. You have to be careful, and it's not good for the economy or the markets either. Now Jones, you can see that it is climbed like the sideways zones, and 2 days of that hammer pattern is a good bouncer from the 30,000 kind of support zone, and it is facing some resistance at the second support previous support. Right, remember it had slipped off from the previous major supports on few weeks back, and then it's a comeback. Whether it will sustain to show the green candle slip to climb back to this major resistance is what you have to watch out. But yeah, so as of now, you can say that it has climbed to the sideways back after slipping to the bearish zone. So, but things are not great for the Nasdaq. It's clearly in the bearish zones, and the correction continues, goes beyond 35% probably. S&P 500 also is on the edge. It is just like Dow Jones, it has climbed and in the sideways zones primarily. So basically IT is doing bad, right? Nasdaq is full of IT stocks, so that correction has not stopped, and other two indices are showing some strength as comparatively, but overall it's a bearish downward that we are seeing. Unless and until it climbs back and regains the previous support zones, we have to keep a close watch. Same has to be done for tomorrow morning also. No matter what analysis we do, if the US market is heavily falling, then tomorrow definitely all the analysis goes for a toss, and if you are bearish, it can happen the other way. So crude oil is once again showing 110 plus value. It's not cooling off, it's staying at a very top level. Momentum is rising, and it's a green hike to crude oil price is not good for our markets also. Now gold is has been bouncing from the previous support zone, and today was a down day for gold, but yeah, we'll have to see whether it's facing the resistance of the previous support zone from the it has slipped or not. The question is whether it's able to climb back or not, but at least the momentum has climbed back in the sideways, at least from the bearish zones where it's locked. Two actions, both short side. Local path labs, bearish momentum in the medium term and short term, bearish trend on medium term and short term, price within a downtrending channel. It has given up major support zones, and then there is still more length to go till 1263, so it can give swing trades. Dr. Path Labs. Lupin is another stock. It's a downsliding trending channel. Momentum is bearish, trend is bearish, and it could still give a short swing trade till 537, that zone, right, where the support could. So you have to be very cautious to put the trailing stop loss once it hits here tomorrow. Yeah, so the wrap up is mild bearishness, right? It's because of the chart pattern, support zones, and sideways momentum, trend indicators, and demand, volatility, and all of this. I would like to conclude that I have a bearish view for tomorrow. It's mild bearish because we are very close to the support zone. We are aware that any down breaking of the 15650 would mean that we may slip further down big, because supports are further major supports are gone. Right, previous swing low means another swing low would be made, so it can go deeply bearish. So there is a possibility still there, but still that is not breached. 15650 is not breached. So 670, 15600 is still not breached. So we have some hope that it can consolidate here. So Bollinger Bands are showing some kind of consolidation after. If you go back and look at the Bollinger Bands, you can see that after a downside expansion, you can see that there is some beginning of a consolidation, at least in the Banknifty, it is clear. So that would mean that it is hovering this range, down, up, down, up, and not break the swing low. But the swing low is broken means we have trouble. That's what we have. So that's the thing, right? We have the inflation in our country, US markets, and they're all historic high inflation levels, and the interest rates are hikes. So obviously money will flow out of them, and that's what Fyers are doing. They're selling heavily, and crude prices because of the war situation, crude prices shot up and rupees weakened to the core. So all of this consolidate still market, and that's why it is about 25 India VIX. So volatility still in the market. You'll be cautious, reduce your position size, and have stop losses, have hedge positions. That's all we can do. So VIX is greater than 25 means we have to be cautious. And extra volatility, gamma effects, and all that will be there for expiry day tomorrow. So push, right, position size properly, and stay out of the trade if you're not a pro, right? So that's what my view is. Might be bearish for the short term for tomorrow, and if that helps you to frame your own view for tomorrow and your trade plan, that helps you some way, definitely subscribe if you're not done that. Hit the like button if you can consider that, and you can also put in comments, feedback, and all that, and also share it to maximum. We have very few subscriptions. I appreciate your help in this regard. Thanks a lot. Happy trading, happy trading. Bye.